All right, guys, I'm gonna get started with this real quick. I'm gonna get on here and I'm gonna show you guys how to do my technical analysis, and I'm gonna do it on TradingView so you guys can check it out and see how I mark up my charts. Basically, I'm gonna show you guys on the gold chart, and you could do this analysis on any chart that you want. You could do it on any pair. It works on any pair as long as it follows the steps and the procedures of what support and resistance is. So this is TradingView right here. I'm sure you guys can see all these tools on the left. If you get on TradingView as a beginner, it's going to look very overwhelming for you. So I'm going to go really quickly through certain things that you guys are going to see on here. So at the top, right here where my mouse is, this is basically the pair that you're going to be trading. Right now, this is gold versus the US dollar. So at the end of the day, the dollar has an effect on what gold does as far as how it moves. So if the dollar is going down, gold usually goes up. And if the dollar is going up, gold usually goes down. Here are the time frames of the candles that you will be looking at. So if I click on the 1 minute, each of these candles that you see on the screen. Let me maximize it for you guys so you can see it. Each one of these candles are 1 minute candles. So if you come all the way to the right and you see this candle here, that's 1 minute, 2 minutes, 3 minutes, 4 minutes, 5 minutes as you count backwards. And that'll let you know, the time frame for each of those candles. If you go to the 3 minute candles, each of these candles represent 3 minutes. If you go to the 5 minute chart, each of these candles represent 5 minutes. You go to the 15-minute chart, each of these candles represent 15 minutes, so forth and so on. So you got the 1 hour, the 4 hour, the daily chart, the weekly, and the monthly. There's other time frames that you guys can check as well, but I just focus on the daily all the way down, and I'll get into that a little later. On the left here, as you can see where my mouse is at, these are different tabs that you'll be using that you can use to mark up your charts. So basically, the top one right here is the cursor. So you can change this to whatever you want. You can hover over it and click that little arrow next to it. You have the cross, you have the dot, you have the arrow, and you have an eraser. So basically what this is if you click on cross on my screen, you can see that's how the mouse will move. If you switch it to arrow on my screen, you see the arrow. You don't see those dotted lines anymore. And then dot, same exact thing. It's a dot now. So whatever's comfortable for you, you can change it to whatever you want. I usually change it to cross because that's just what I like. Under that are the trend lines and all the lines that you'll be using to mark up your charts. The cool thing about it is you can star it. So next to everything that you see on here is a star. And if you press the star, it'll put it in a little small box for you down at the bottom. And these are basically your favorite things that you use to mark up your charts. So I have the trend line here, I have the info line, I have the horizontal line, the horizontal ray. I also use that as well. The cross line, so forth and so on. I don't really use any of these things down here, so I just leave that alone. And then under that, you have the Fibonacci retracement tool. You have a whole bunch of other tools that you can use in this tab as well, but I don't use any of that stuff. The only thing I use here is the Fibonacci retracement. I started that as well, so it's down here on this tab for me. And then right here under that, this is the long and the short position. So the long and the short position, I started that as well, so that it'll be in this own box down here. And these are the only things that I really use. The cool thing about it is this is how I find my take profits and my stop losses. So if I'm going in for sales, I'll use a short position to put on the charts, and I'll show you guys how to do that a little later. If I'm going in for buys, I'll use the long position and put it on the chart, and it sets my take profit and stop loss for that as well. Other than that, you have the brush, the highlighter, the arrow marker, the arrow. This is just stuff that you can just put on your charts so that you can, the arrow, right? Just like that on the chart or whatever. So it'll just pop up there like that if you were analyzing something. You have the arrow mark up. So if you decided that you put this under here and just indicate that the market is going up, that's just something that you can do there as well. there's just different things that you can do on here. It's really nothing that I really use on here except for the rectangle and the path. And the reason is because of this. These rectangles here, just click on rectangle and it makes these zones on my chart for me. That's all it does. So I mark that. And then you have smiley faces and all that stuff if you want to get into the emojis, the ruler, the magnifying glass, staying drawing mode, meaning you can draw on this the whole time without switching anything. You can lock the screen and then you can delete objects off the screen as well. To the right, this is where uh, I have the currencies and the watch list. So if you click this little tab right here that you see my mouse hovering over, it'll open or close it. I usually have it closed so I can see the full chart, but when it's open, it just shows all the currency pairs that I usually trade. AUD JPY, Euro USD, GBP CAD, Euro JPY, and then my second section, I have USD JPY, USD CAD, and then I have my indices and commodities down here. So NAS 100, gold, US 30, the dollar, DXY, and then Bitcoin. So that's here on the right. The clock is basically these alerts. You can put zones on the chart so that if the market hits those zones, it'll alert you on your phone and send you a notification. So you can put that there as well. Those are the only two things I use. So that is a brief overview of what TradingView is and how it works and all that stuff. The cool thing is I'm actually in dark mode right now. When you get on TradingView and you go to tradingview.com, it's actually going to be on the generic regular mode, and it's going to look like this. So your screen will be white. You can actually change your candles to whatever color you want it. I like green because green represents money to me. So when it's going up, I feel like that's a positive thing. And then when it's going down, I still use the red candles. I like the dark mode only because it does better for my eyes. So I changed it to that, and you can literally just click on the letter of your login name at the top left, or it'll be on the bottom right, depending on what you're using. And then it'll be dark mode on the inside, and you just click on that and get from there. So right now, I'm just going to keep it really, really simple. I'm going to show you how I mark up my charts daily. Right now, again, we're using the gold versus the US dollar, so XAU USD. And this is how I start off. I start off on the daily chart. And on the daily chart, I basically want to see where the last couple of highs were and the most recent lows. So the other day, we had a very bullish candle that ended up being bearish throughout the whole day. So we can say the market's in a downtrend, right? So what I would do is I would come over here. Well, I would actually come down here and click on the horizontal ray, mark my line right there, and I will leave it red because that signifies when the market hits that line, it'll go down. So I'll hit the ray again, and then I'll come to this low. I'll put that line there, and I'll turn it blue. And the reason being is when I feel like the line, well, I'll turn it green for you guys for candle's sake, since the candles are a different color. But when it hits this line, that means the market is going to go up, as you can see here. As you go further down in time frames, you're going to notice that the candles are going to get wider and wider and wider, and they're going to split up a little bit more because there's more volatility in the lower time frames as well. All right. So these are your daily highs and these are your daily lows. Okay. So then I'll go down to the 4-hour chart. And then as you can see here, what I look for are double tops and double bottoms to signify my lows. So right here, I'll get my horizontal line. I'll bring it up to this double top right here. And then I will mark that and change that red. Okay. And the reason being is when you have a market or when you have candles that's bullish, and then you have another one next to it that is bearish, that forms another level, and vice versa. When you have a bearish candle and then you have a bullish, whether it's semi-bullish or fully bullish, that forms another bottom. That forms another level as well. So I'll take my horizontal line, and being that this line is like super close to the daily low, I don't have to place this here, but I'm going to, just for example's sake, because as you guys can see, this is a bottom and it did respect it because this candle right here that wicked did not close under it. So we'll mark that for you guys, okay? Then I'll go down to the hour chart. The hour chart gets really, really good. Spread it open for you guys right here. Now, I don't know if you guys can see this here, but this is another double top right here. This is another zone. And with these wicks, you can call that another zone, but we won't do that. We'll just focus on this one. Now, with this third line that I'm putting on here, even though this is a top for this for these two candles, what I'm going to do is I'm going to backtrack a little bit more and I'm going to check some things out. And what I noticed is that this line is actually support and resistance. So what I mean by that is, as I came back over here, the market went bullish. It broke through this line. It respected this line as much as possible. It went back up, came back down, and then it broke through this line again. So this is a vital area of interest with gold right now, okay? So I'm not going to keep this green. I'm going to change it a different color, actually. And for it, this is basically the equilibrium. And the equilibrium, change that to yellow. That's just signifying that this is support and resistance. So now that I know my zones, what I'll do is, now that I see my highs, what I'll do is I'll take my rectangle, I'll take it at the top of this wick, and I'll bring it down midway to that bearish candle. And I'll slide it over, change the color to red, because I feel like when the market gets into this area here, it'll come back down. And then I will do the same thing with the rectangle for the bottom. And I'm marking this bearish candle and this bullish candle. It's going to be a small zone. Right there. Slide it over some more. I just make it to where the ending of this zone is at the top of this bullish candle right here. But I'm going to change the color of this as well, because I feel like when it gets in this area, it goes up. So we're going to do that, right? So right now we're in a zone where I feel like it's respecting this area right here. It can possibly go up, but it can also possibly go down. Right now, it's no volatility. This is Asian session. Nothing's really happening. But what I'll do is I'll go down to a smaller time frame, which is the 15-minute time frame. And as you can see, these zones pop up for you. And they're like super far away from each other, right? Compared to what you were seeing before. So what you want to do is you want to keep going back further and further to make sure that what you're seeing is correct. You see that your support and resistance line is actually valid all the way through. It became support and resistance multiple times. So this is definitely the equilibrium. And another thing we would do here is we can mark this zone right here as the equilibrium, but you don't have to. I'll go down to the 5-minute. And then it just becomes a patience game. Literally, all we have to do is wait until the market hits a certain zone, and then we'll react. We will react to what's happening. Right now, in the smaller time frames, you can see that the market is consolidated right now during Asian session. You can see that it's bouncing up and down through these areas. But if I make this smaller right now, candle's going to be real small. But if it comes up into this area of interest, which is this red box, I do believe that it will drop down. Now, the other day, see what I mean? This is perfect. The other day, it came up into the zone, and this is the 2134 zone. So it came up into the zone, and this is the highest it's been, and it's been dropping ever since. So we can say that the market is bearish. Right now it's super consolidated, as you guys can see right there. Sliding this over. So being that the market is bearish, we're going to be looking for bearish moves. So what you want to see is you want to see bullish movement so that it can come back down. Or you want to see a break of structure on the downside and then a retest so that you can understand that it's definitely a downtrend. And when I say break of structure, this is what I mean. Now, this area right here, this is a bottom, right? The only way this becomes a break of structure is this candle right here. Let's just say it hypothetically comes down. It passes that, and the candle closes beneath that double bottom. Then what you want to see is a retest of that zone for you to enter the trade, for you to ride the wave all the way down. That's what you're looking for. Now, if that didn't happen and the candle hypothetically came down here, it didn't close it didn't close under that double bottom, and it closed, let's just say it closed even with it. It's respecting that floor, but we're not counter traders. So what's going to happen is we're going to wait for it to come back up, break that structure, or we're going to wait for it to come up, come back down, go back up, to then enter right here and ride that wave all the way down. So when I say we're not counter traders, what I mean by that is this. If we're looking for bearish trades, and bearish trades is all we're looking for, we shouldn't be looking for buys in any way, shape, or form. You know what I mean? So if we're looking for sells only, or the market is bearish, meaning we're looking for sells, we're not getting in for counter trades, even though something might say, okay, the market is going to go up. And the reason is this: we don't know how far it's going to go up compared to finding out zones for take profits when you're going and following the trend. So let's use another hypothetical. Let's just say we got in the market for a sell right now, and we read that the market came up, retested this zone. Actually, it retested it perfectly here in the Asian session, and it's respecting this support right here. I mean, it's respecting this resistance right here, and it's dropping, right? So hypothetically, let's just say we got in for a position. I would take the short position. Let's just say this was the entry right here. What I would do is I would step my stop loss to the nearest swing high. That's pretty tight. So I'll bring it up to the next zone right there, a little past the liquidity. And the liquidity is basically these wicks up here. And then I'll take the bottom of this green box and I'll drag it down until the middle says risk reward 2. Right? So here's my stop loss and my take profit. My stop loss is 20.31.28, and then my take profit is 20.25.19. This is a 2-to-1 risk to reward ratio. Okay? And then if I go a little further, I'll take it down and I'll drag it till it says 3. And once it says 3, right there. Once it says 3, this is a 1-to-3 risk to reward ratio. The take profit for this is 2023.16. So if you believe the market's going to come down here, you'll make some good money with gold, right? And then if you're an overachiever, you'll take it down until it says 4. And it doesn't have to be accurate, just pretty close, right? So 4 is right there. And as you can see, 4 actually ends in the zone that I created with this green box. And that's 2021-13. And that green box basically gets to the next, the next lowest, well, the furthest lowest zone that it's been in a while. So as you can see, this is how you can monitor it. You can see the candles right now. This would allow you to know that your trade is going in the right direction. And you could just follow it like this, or you could just go on MetaTrader and just follow it on there if you want to, so forth and so on. So that's how you do it for a short position. If you want to do it for a long position, if we're getting in for buys, hypothetically, let's say we got in for a buy over here. We click on the long position box down here. Let's just say we caught a sniper entry and we got in right on this body of the green box, right? So I'll bring my stop loss a little under that liquidity, and then I'll drag this green box until it says 2. And then my stop loss would be 2022.37, as you can see here on the right. And then the take profit would be 2028.34. And as you can see, if you were actually in this trade, you would have crushed it. It would have smashed the TP easily. Then if you wanted to do a 1-to-3 ratio, just drag it all the way up till it gets to 3. All right. Even this trade would have hit. The take profit for this is 2030.36, as you can see here on the right. And then if you wanted to do a 1-to-4 ratio, right there, a 1-to-4, you can see the market never went all the way up, but came pretty close. So if you were monitoring this trade, you can literally, hit your take profit 1, hit your take profit 2, hit your take profit 3. And when you got to 4 and you realized that the market was about to reverse, you could just close out your trade, but you'll still be in profit. Pretty cool. So delete that there. And then that's basically all I do. I take my entries on the 5 or the 15-minute candles. After I find out on the daily, after I come here and I see, okay, the market is bearish. Right now it's in a retracement coming back up, but I do believe it's going to continue to drop. So in my mind, the market is bearish. In the 4-hour, I'm doing the same thing. I'm making sure that the market is in the same trend, and it is also bearish, and I can see that. And then on the 1-hour, it's definitely bearish. So 3 different time frames and 3 high time frames are solidifying that this is a bearish market right now, which is pretty cool, right? So for me, that's all I'm going to be looking for. I'm going to be looking for sales. So when the market opens tomorrow and I see in pre-market around 7:30 to 8:30 that the market is rising up, going up and up and up and up, it's just letting me know that it's probably going to chase another high or another zone, and then it's going to continue to drop. Now, the market can definitely do whatever it wants to do, but usually when you have your charts marked up and everything like that, it's pretty on point. So now on the 15-minute, even though it's so consolidated, what I would expect for this to do right now is break through this equilibrium, this yellow line. I do expect it to actually break through it because it came through it before. This was December 4th. This was Monday. And then this was Tuesday. And it went through, came back, went through, came back. And then this was today. And it actually respected this. But one thing about these zones is that the more it touches it, the weaker it gets. So I do believe if it comes through here, it will probably change character and go and fill this fair value gap right here. And that's another conversation for another day. But I do believe this zone has to get filled. And once it touches this zone, it's going to drop back down. Now, being that this zone is put here, this is a fair value gap. And that's when you see indecisive, not indecisive, but incomplete candles here. And that's like this bearish candle here, this bearish candle, and then this bearish candle. This is price that has to get filled. Now, the thing about it is, this is what I expect to see. I expect to see the market go up, come down, go up, come down, go up, fill this gap, and then drastically drop. That's what I expect. Now, does it have to happen like that? No. What can happen is it'll go up, come down, go up, come down, go up, fill this zone, break through that zone, close the candle in that zone, and then it'll be a whole change of structure and it'll be a whole uptrend. So now that if it's an uptrend and I know that the market is changing, what I would wait for is for the market to go up a little bit and then retest and respect this area right here. If it was to do this, and if it was to retest and close and respect in the candle close in this area right here, I would take a trade right here for a buy for it to then go up. All right. But what I do believe is going to actually happen is what I said the first time. I believe it's going to come up, come down, break through this equilibrium, come down, come up into this fair value gap. And once it gets into this fair value gap and it fills it, I believe it's going to drop just like that. All right. So that's literally the technical analysis. This is what you have to go through before you enter the market. Another thing you have to do, which I didn't show you guys, is check news. So you're going to go to forexfactory.com and this is going to pop up for you. And what's going to happen is it's going to show you folders. So if you're trading currencies that have some high volatility or high action going to happen in news, it'll pop up right here. So what's going to happen is right now, this is Wednesday. This was actually today. So today, this morning at 8:15 a.m., you didn't want to trade gold at all or any pair that had the US dollar with it. So like USD JPY or USD CAD or, GBP USD, whatever it is. You don't want to trade news because what happens is it goes in a direction, it goes up or it goes down very drastically, and you can lose a lot of money that way. So I also know that tomorrow is Thursday. So you can check the whole week if you want to. If the folders are yellow, you have nothing to worry about. If the folders are orange, there's going to be some action in the market. It might not be affected too drastically, but you still want to, be careful with that. But if the folders are red, you want to stay away from it as much as possible. You can play the guessing game and you can try to figure out what the market is going to do at that time. And if you're on the right side of it, congratulations. If you're not on the right side of it, you will blow an account. So be careful with that. So tomorrow, December 7th, Thursday, December 7th at 8:30 a.m., the market will be making a decision because of unemployment claims. And you can click on the folder. You can click on the folder. It'll tell you the forecast from November, November 30th, the 22nd, the 16th, each week. It'll tell you the actual numbers, the forecast, and the previous numbers before that. It'll tell you certain things about it. So you can look at the news and get a grasp of whether it's going to affect the dollar positively or negatively. And then you can make a decision from there. A lot of people do trade news. I don't trade news. I don't recommend trading news because at that point, it's just a guessing game. But I do believe what's going to happen is because of news, I do believe that the dollar will get stronger, which means gold will then drop. So, like I said, this is what I'm looking for. I'm looking for the up, the down. I'm looking for it to raise up. I'm looking forward to getting to this zone. And hopefully by 7:30, 8 o'clock, it's here. And then once it gets here, then we'll definitely drop down with news. I'm not trading news though, but that's what I do believe is going to happen. Or what's going to happen is news is going to hit and it's going to continue. It's going to continue to go up, 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 up. And then once it hits another area, Like it can chase this area right here, which is another high, or it can chase this area right here, and then when it gets up here, then it'll drop again. So that's what I'll be looking for with gold. You can literally use this top-down analysis with any pair. You can do that with anything. So I'm gonna end it right here. You can definitely comment, like, share, subscribe, do whatever you guys got to do. Show this to somebody, and then we'll go from there. All right, guys. Talk to you later.